Good morning, my neighbors. Welcome to another episode of BYTTT. I have been under the weather quite a bit, and just trying to maintain this so that way I can get this recording going. So don't forget to hit the like, subscribe, and the bell button. That way I can go ahead and continue to grow this channel the way that you like. That said, we got a lot of work to do, especially skipping the day. So let's get right to it. The first thing I want to break down is the fact that NQ is continuing to drop, but we are at a order block. We have a 2 candle order block that's right here. Plus, you can kind of see this is an area of contention where the market tends to have a response. So there was any type of flip of action that was going to be found somewhere around here because buyers could actually step in this level. Sellers, if they were up to the top, they're going to start taking some of their profits off the table as they shorted it. So that's what you want to look for. That's why these order blocks are so key. You can kind of see the response on yesterday was very large, right? We talking about a drop that went down about 1,000 ticks, 284 points, just to go ahead and recover it. So you talking about if you caught just a piece of either side of this on the right direction, you're talking about you probably could have walked away with 500 ticks. Let's go ahead and move over to oil. Oil inventory was released on. Oh no, I'm sorry. Take that back. Oil inventory was released. I skipped my days, so bear with me. Oil inventory was released yesterday. I kind of gave you a warning of where we could go, which is this order block. I knew it was going to be tough. So you can kind of see the response off of oil is to get a continuation to the upside for a rejection somewhere around that 65 area that will push us down into about 61, maybe even 60. I don't think we're going to get into the 59s. This is a very thick order block, so that's going to be a little bit tougher because of how much price action is inside of this area. So just look for this to kind of give you a bounce somewhere around this area. Here's gold. Gold is relatively sideways. Let's look at it from a weekly standpoint. Still kind of like a rising upside. I think they're going to try to take one more stab at it. But this is starting to give me weakness on gold because rising wedges are usually a bearish momentum, saying that there's more sellers around this area than there are buyers. So look for gold to probably retest somewhere down in the lower register. Maybe even coming down to like 30, 3,100, somewhere around there. Here is silver, and I always tell you how to chart silver. In this consolidation, it's also just slowing down the momentum in gold. If this thing breaks out the top and starts to get to that $40 that I've been aiming for, look for gold to go ahead and rally. I don't think it's going to rally and take out anything really key up there, but it should give you some good momentum to make some money on gold. All right, so here is the British pound. The British pound is starting to get outside of that order block. This is why I was telling you that there's a possibility of continuation, even though the nullification of this head and shoulders is over, but you can still kind of see that there is some weakness as far as any type of momentum continue to that upside. We rejected at this area. They attempted 1, 2, and 3 times to stay inside the block, and now we're outside on the bottom side, which is turning this bearish. So look for a drop to maybe that 1.33 before it starts to rally again. Here is Bitcoin. Bitcoin, when they got up to that 124, they really started selling off something substantial. Hence the reason why we're back to 113. They're trying to build their position to see if they can go ahead and continue back up into that upside. But I don't see any targets right now. We may just fall into a consolidation cycle as they try to reposition themselves in this upper register to see can we continue to the upside. If there's more sellers than buyers in this area, look for Bitcoin to get back into that 110, 107. There's a strong possibility it may retest 103 just because that's where the 200 moving average is. And it's been a while. The last time we touched it was around April of 2025. So we're talking about, what's that, 4 months, give or take? So for 120 160 days between, just kind of spitballing. No, I'm sorry. Yeah, 120 to maybe 90 days since we touched that 200 moving average. So we'll see what happens. And then right here is the Russell. The Russell was doing all types of good sides for this upside. And when we last talked about this, which was roughly on Tuesday, we was looking for this to kind of continue on this upside. So as we kind of looked at it on Monday, it was holding this area. We did close inside of that order block, but Monday we was outside of there. So unfortunately, you could kind of see that the market is kind of responding to try to go ahead and put this back down. So keep that in mind. And then we got the US dollar. This was that trend line I told y'all from a couple of days ago, that even though it is broken, the trend is not broken. So they've broken the trend line, recovered, almost like a nice little sweep, and now we're inside the order block. If this thing pokes its head out of this order block, look for more pain outside of the market, because that's going to go ahead and continue to the downside as we continue. All right, go ahead and pull out a pen and a pad so that way I can go ahead and give you the news, and it's coming in hot. All right, the first thing I want to go ahead and talk about is our economic calendar. So much has been done. So we had housing starts that kind of gave us that effect around Tuesday. On Wednesday, we had ourselves mortgage information like the rate, applications, and refinancing. Oil inventory, this is what's kind of giving the catalyst for oil to kind of rally. Fed Waller was speaking, and then we had FOMC minutes that dropped around 2 o'clock. It had a very interesting impact on the market. Let me go ahead and switch over to the 2 hour. Kind of give y'all a little sense of it. This was roughly around this area here. That really started making the dollar rally even further. To be honest, I think most of this area here was people just repositioning their positions and just getting out of their space, or whatever they're covering, like your Nvidias and everything else, rebalancing. And when they saw whatever was going on in the news, the sell-off continued. We recovered towards the end of the day, hence the problem and the pressure that they were putting on the dollar. But you could kind of see it didn't break anything. It's just more like pressure as far as when we started rallying to the end of the day. So let's keep that in mind. FOMC minutes did not give us anything relatively positive. You know what? I did say Jackson Hole was a 2-day event. Look at that. There goes Jackson Hole. That's playing a factor. Let's see. Today, we're going to get initial jobless claims. So I'm leaning that it's going to be something adverse to the market's rally. We're probably going to get something that's going to push us down even further. We got global PMI. That's going to have an effect. Existing home sales. CB lending index. This is just for lending, so that way we can get homes and all that. That's going to be something that's going to be impactful. Mortgage rates. That's going to have a response. This is the 30-year tips that I told y'all about, plus the Fed balance sheet. Looking for how well they're diversifying themselves over there. Well, sorry, not diversifying, divesting and getting out of certain things, so that way they can be able to really start to lower interest rates. That's what everybody's anticipating, especially coming into to September. We got Jackson Hole. This is day 2 of Jackson Hole. That's going to have an effect. And then we got Fed Powell speech, 10 o'clock on Friday. This is what everybody's waiting for after Jackson Hole. And of course, this is going to be the ending of Jackson Hole as well, which is going to be the last day. So that said, quite a bit of stuff that can have some major impact in the market. So just plan accordingly and you will be relatively fine. So let's go ahead and get into the news. You already know I use CNBC Pro. If you don't have CNBC, I do suggest that you get it. It is very enlightening when they start talking about some of the news articles and everything else. And they tend to be the sell the news. That's just how I kind of see it. All right, here's what happened. Here's what has happened to the stock market in the past after the Fed cut rates at record highs. Now, I don't want their opinion. If you want to grab this article, then go ahead and grab this article. But I want to talk about this because everybody is like, oh, the Fed needs to cut, Fed needs to cut. You got to remember, when the Fed cuts interest rates, it basically devalues the dollar to a certain extent. That's why whenever we cut interest rates, the market tends to rally. Cheaper money means you can do major investments into better companies, allow the growth of the company to give you better interest than what you would be getting from dollar, which is like the U.S. bonds and everything else. All those start to fall and not have an effect, right? When we're at all-time highs, you got to ask yourself this question. Well, if we're at all-time highs and I want cheaper prices, there's a possibility that the market's going to do something violent of a race to get to some of the prices that they want to get, and then use the cheaper dollars to buy it at better prices, knowing that the companies are going to recover something well. That's how I look at these new highs. We've been making new highs after new highs after new highs after new highs. Now, I tell you this only because of the fact that I don't want you to take it and you're going to go straight into sell mode, wait for it, and then bounce. It's very important that you understand price action. Because of these record highs, we need some type of exhaustion to happen. So that way, it's just like you're breathing in oxygen. You got to breathe in oxygen and let out carbon dioxide. So it's gotta have some type of balance going back and forth. So with these new highs, without any real true pullback, just like with the dollar making all these lows and all this, it's almost like somebody's holding it down. It's suppressed and held down. It has to at least come and test up into here, maybe like the 50-day moving average, and then the announcement of rate cuts will make the dollar drop, maybe even drop lower than where it is right now, which is under that 96. And then we probably get that true rally when everybody's happy with the profits that they're gaining. Because supposedly we're only going to get one cut versus the two cuts. And this is part of the reason why we're having so much, there's volatility in the market. They're very indecisive and nothing's relatively stable. So that is what you want to kind of key off when you hear something like, here's what happens in the stock market after the Fed cuts rates at highs. It's something that you can plan accordingly, and the charts are already giving you all the fingerprints. Just pay attention to that. Let's see. Crypto treasury firms whose shares once soared has tumbled in August. Here's the biggest winners and losers. Now, there was supposed to be some losers here, but the question is it really losers, or did they they changed their name to Strategy Inc. instead of MicroStrategy? All right, cool. So you gotta ask yourself this question as you go really understand this. Is this part of the market cycle? There was a nice little. Maybe I should go find it. There's a nice little snippet that just says, "Hey, we're at this part of the market cycle. Then the economy recessions, and it does this, and it kind of like goes up and down, up and down." I'm gonna see if I can find it before I post this video. But if I don't, just look at economic cycle and stock market cycle, and then you'll know that we've had a nice little rally. You have your pullbacks and a rally, and there's a point where we go into a bullish state where we just go to lower lows. It does not mean that the higher time frames are bearish, but it just gives you that reprieve off of a $500 stock. Now is at 342. Could this be the cool down? Could this be the where everything is? And then now it finds its base and it continues back to the upside. That's what you want to kind of look at. Let's see what else. A BMNR. This is the one that's going to try to do the MicroStrategies ideology, but they're going to do it with Ethereum, and you can kind of see what it looks like here. Don't like what it looks like there, but we'll go ahead and just take a peek over here on the daily. Nice little rally. This is all part of the rally to 125,000 over a Bitcoin, and you can kind of see it's starting to taper off, and that's what you want to kind of see, because you want to see them build some type of base before they make that true rally. And I think cheaper interest rates is going to come in play. Again, you're not going in for their earnings. This is not what you're going for. This is more like a Bitcoin exposure. They have a few more. You can kind of see them here and then make your judgment, but the charts. The charts will tell you everything you need to know. All right. And yep, that's it. That's for the news. Let's go ahead and get into the earnings cycle. All right, so that's that for the news. So let's go ahead and get ourselves over into the earnings cycle. Let's go ahead and take a peek over there. The first one I want to kind of talk about is Walmart. They reported their earnings this morning. Looks like they haven't reported yet, but it should be coming up soon. All right, so we got like 104. Now, this one, I have a feeling it was going to pop to the upside. I'm very curious about it. I don't think they're a very sound company at this price. I think this should be a little bit cheaper, maybe back to $86. But I have my own reservations on that. I still don't know what they do. They just sell products, and their margins are so low. It's more of a quantity thing, which is going to be very tricky for a stock like this. All right, the first one we're going to talk about is Walmart. It looks like Walmart is trying to make another rally. I do think they're going to give a nice little pop up, but I don't like its price over here at $100. Still don't know what they relatively do, because this stock is one that is in the business of selling as much stuff as cheap as possible, leaving margins to suffer quite a bit. And I don't think they have any relative reason to be up here. Their earnings modest. They are a $165 billion company. Maybe that's the reason why we're up here. They do pay dividends, but the dividends is average, right? So I don't know how I feel about this continuing up. I'd want to see a discount to like probably $86, and then we'll probably see something a little bit more sustainable for any more upside. I don't know if it's going to get past 100, but we'll see how that goes. All right, Intuit reports tonight. Really, really good company. They've been around for like forever. And when you see stocks at prices like this, you gotta also remember we're talking about shares float, only 272 million shares floated. So this is something that when it starts to move, it can really, really move. Looking forward to come back and retest this order block. Let's go over to the monthly, probably get a better sense of it. Yeah, I think they're just trying to kind of fill right back down here, kind of like an evening star to this downside. I think this earnings is probably going to be key on them holding $2.66 a share. That is what you want to see from a company. What's their dividends? Could be better. Could be better. All right, so yeah, and you can kind of see this rally back into here was for its gap. Were they just filling the gap so that way they can go ahead and push this right back up? Very possible. Keep this in your radar for today. And then there's Workday. This one had commercials almost everywhere, every single word during the pandemic. I think they just kind of get into their space of pulling back quite a bit. This is the one that kind of does a lot of that organization monitoring with their software. I want to say their package software, yeah, information technology. So this is also in the tech space, so that's why we'll probably get a deeper rally as tech starts to drop off. Golden Cross, Death Cross, Golden Cross, Death Cross, and right now the Death Cross looks like it's holding. I think eventually it's going to try to get back to that 266. Again, they return money to shareholders, they generate revenue, and it looks like they haven't really missed a earnings in quite a bit. They don't even miss revenue. That's how solid this is relatively on this company. Maybe a nice little bullish divergence. Maybe a nice little bullish divergence that can actually pan out to this upper register. Maybe this is just all consolidation so they can finally get back up there. But I don't like the fact that they kept on playing with death crosses over and over. I want you to make a decision before I invest my money into your company. All right, let's go ahead and look for tomorrow morning. Of course, we're at the tail end of the earnings cycle, and we are very close to quad witching each and every day. And BJ's is going to report in the morning. I think this is going to be a sentiment play for people that like to play Costco. So just keep in mind on the response on BJ's. They do return money to shareholders, $5 billion in revenue. And this does look like a bullish divergence that's forming right here. So look for some upside movement on this earnings cycle going into tomorrow morning. HCA, this one was a little bit annoying. I wanted to play this one. This had to been back in maybe like June-ish or whatever. And we was filling a gap and it just didn't really fill. You could see we kind of pulled back over to here. And then we finally made our real push. This one is one I think will benefit quite a bit off of the fact that UNH is suffering. And you could kind of see UNH at a nice little rally after the Warren Buffett story, and then it pulls all the way back. So we was up at that 320 register, now it's at a 299. So this kind of gives me a little warning that there's a possibility it could come down a little further. But as far as HCA, this is 1, 2, 3, 4 straight great weeks. Very impactful. I had it on my radar, but I kind of stopped looking at it after getting my tail handed to me over around that area, right? So look for new highs since it's so close to it. Maybe get around that 420, 425 before it starts to sell off again. Let's go down a little bit. Home Depot, they reported their earnings. They did a miss here and they did a miss here. Again, small misses like this doesn't have much of an impact to me, but I do think that some people are shaving some money off the table. I wanted to see if this bump and run was going to fully pan out and get up into that upper register of that order block, but you can kind of see the market's like, no, I got other plans, and it kind of rejected off of this side of the area. So look for Home Depot to probably come back outside the block, find some support, and then they'll take over the block. I still think Home Depot is going to be a $450 stock. We'll see. Let's go down. Let's go. Oh, Adobe. I'm a little mad at myself about Adobe. I did think that they were going to be coming down. I've been keeping my eye out on the production, the technical production. I don't know what would you call that space. So to kind of give you a little sense, I was looking at everything that they have. They produce photos with Photoshop. They produce video with After Effects and some of the other stuff. They produce music with their audition software. They have a lot of things that they have as one big old conglomerate. And right now, there's competition coming from every way inside. And there was one recently that somebody sent me, and it's what helps me do a lot of my productions now. And I'm not saying that Adobe is going to drop down into the 250s, but I think its better days are behind them because what you go for Adobe was for the suite, the subscription service, and everything else, and they're being attacked. PDF, you can get that anywhere. They did dive into the DocuSign area with Adobe Signature, but there's so many now. So is there money here? Maybe, but I won't be surprised that Adobe hits about 250, maybe even 200. Does a bounce, but it never gets back to $700 again. All right, I think we kind of ran the gambit and we covered everything. I'm not feeling too well. I apologize. I know I'm probably sound like I'm laboring and everything else, but I want to say thank you for being part of the BYTT team. Don't forget to hit the like, subscribe, and the bell button. Send it to your friends and family. Let them know that I brought you a lot of gems, and we will tough this out. This doggone cold, and it gotta go. Anyways, that said, thank you. Have a great day. See you tomorrow.